Hi guys, I hope you're all having a good week. Just giving my weekly tax tip. This week actually, I was meeting with a client and they were asking about student loans, specifically how student loans are taxed on a self-assessment tax return. So I thought I would answer that question as I answered them and explain to you guys. So normally with a student loan, if you're an employee and you're paying through PAYE, you'll notice that your student loan repayments are worked out on your payslip and you pay a little bit every month. However, that's slightly different. If you're a director of your own business and you have a student loan and you're a shareholder of your own business and an owner-managed business and you're taking things like dividends, those still count towards your income for calculating your student loan repayments. And typically, the way it would work is you would do it on your self-assessment tax return every year. Now the thresholds are exactly the same. So there are 5 plans these days and a postgraduate loan. So depending on the type of student loan you have, the threshold of income can be anywhere between £31,000 and £25,000 roughly, depending on the student loan plan. Once you go over that threshold of income, then you are taxed essentially at 9% of whatever is over that threshold. So that's why you often hear people saying that really student loans and the repayments of them are really just another form of tax, because they're a percentage of your income over a certain level. Especially these days with the size of student loans, it's actually quite unlikely, I think they've calculated, that you're going to ever pay it back, or it's going to be a struggle to pay it back. So it's essentially a tax until you're 50 years old or whenever the loan's written off. But yeah, on your self-assessment tax return, it will be calculated and it will be paid at the same time. So you make payments of your self-assessment tax typically in January. Some people also have a payment on account, what's called a payment on account, in July. That's a whole different topic in itself. But you'll make the payments at the same time as you pay your other tax for self-assessment. The student loan repayment will be bundled up and included with the tax and national insurance that you're due to pay. And it will all be paid at the same time to HMRC. And then HMRC tell the student loans company, and that's how you get your student loan statement. But yeah, so that's essentially how student loans work if you're doing a self-assessment tax return. And critically, dividend income does count towards the total threshold of income. So if you are a director or owner of your own business receiving dividends, those will go on your self-assessment tax return and will count towards the threshold and the amount that's due to be paid on student loans. Just a quick final point. So if you do have a postgraduate loan, it's not 9%, it's 6%. So it's slightly different for postgraduate loans, slightly lower rate. But generally speaking, you're looking at 9% of whatever's over the threshold. All right, well, that's the end of my tax tip for this week. I hope you find it useful. Like I always say, please share, like, and comment. I'd be happy to answer any questions you have, and also hear about your experience with your own student loan, because there's a lot of people have them these days. I know I certainly did. I only recently paid mine off, so it's still in the recent memory for myself. But yeah, if you've had your own student loan, please do share your own experiences. That'd be great.